Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Thursday, January 11th, 5:12 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we're in an uptrend. You can see the trend gauge over here. We've got the four green arrows displayed over there. We've got a yellow sub arrow on the short-term trend as small caps close back below the 21-day moving average today. Couldn't quite reclaim it. Mid caps undercut and reclaimed. All five of the major indexes, or the other three big cap major indexes, still above their 21-day moving average. Market leaders held up fine today despite the volatile market. All five of the major indexes are above their medium-term 50-day, 200-day moving average, so the green arrows are there. So what happened today? CPI before the open, and it was hot, meaning inflation was higher than expectations. And there was initially a gap down off that. As we got closer to the open, we actually ended up opening green and then rallied early and then had a pretty harsh three waves down sell-off that bottomed late morning over lunchtime, and then a big cup and handle formed. And this is a win for the bulls. The market got some economic news it wasn't expecting, tried to sell off, and buyers showed up and leaders stayed strong. Definitely a win for the bulls. Here are the final numbers. Big seven down an average of 0.17%. Really better than that, though. Tesla dragged that number down, being down 2.9%. The RG8, the RG8 ETF growth composite down 0.45%, but actually was mixed. Dragged down by ARK being down 2.4%. Remember, Tesla is a major component in the ARK top 10. S&P 500 gapped up 0.2, ended up down over 0.5% at one point, but rallied to green in the afternoon before putting in a handle, closing down 0.7%. Equal weight RSP down 0.33%. NASDAQ 100, the leader on the day, up 0.2%. Equal weight about flat. Dow about flat. Mid caps down 0.25%. Russell 2000 small caps down 0.75%. Global 60/40 up 0.13%. This was bonds. Despite the hot CPI, bond prices up, meaning bond yields down. Bit of a surprise there, and when yields initially started out hotter and pulled back, that cued the market to go higher, to put in the right side of the intraday cup and handle, and that also corresponded with a strong 1 p.m. 30-year bond auction that also cut into yields and spiked stock prices. So good stuff there. In-house GROTECTION leaders did the job again. Green on the day, up 0.28%. Let's get to the charts here. Here's the S&P 500. We'll go to the 5-minute chart. You can see the volatility. So initially gapping down, pre-market on CPI. By the time we opened, we're up and climbed a bit higher, up to 47.99, 4,800, a very clear psychological level. And then a harsh three waves down, bottoming right before lunchtime at 47.39-ish. Then we started putting in the right side of the cup. Here is your 1 o'clock bond auction result. Broke above 47.60, trended up, and then a little handle into the close. Definitely a win for the bulls. Undercut and reclaimed the 8-day exponential moving average. NASDAQ 100, same thing, just touched the 8-day moving average, finished positive on the day. Dow Jones Industrial Average, positive on the day. Really tight consolidation here, trying to bust above that 37,800 level, but not quite ready to do it today. Mid caps undercut and reclaim the 21-day moving average, putting in a kind of a really tight 7-day consolidation here after a big move up and then a pullback. IWM undercut the 21-day moving average. See if we can get back above it tomorrow. Really, we not only need to get back above that, but above this downtrending 8-day exponential moving average, turn that higher and make a run at the 200 level. VIX was mild all day, even while the market was selling off, closed at the lows of the day, 4 days below the 21-day moving average. Now, gold up 0.4%, bounced at the 50-day moving average. Gold shares down, however, 0.76%, and the dollar also had what's considered a positive reversal. You can see here, let's go to the 5-minute chart here. Started up, rallied, came down, and then it sold off after that 1 o'clock bond auction again. And this corresponded with yields. I'm going to go straight to yields now. TYX, this is the 30-year, very similar. Higher in the morning, down after the bond auction. So whatever fears of yields being higher from the CPI report, that bond auction put those to rest. So many things economically and macro to pay attention to, and here's the 10-year really coming down after that bond auction also. TLT, as you can expect, that this was higher. Really, this downtrending 200-day moving average is capping the move for now. BND, broad bond market, up 0.5%, holding the 21-day moving average. And today, the 11 Bitcoin ETFs started trading. We're going to continue to show BITO. A lot of volatility around this today. We should have a clearer idea by the middle or late the next week which one is the best combination of expense ratio and liquidity for us to get into when we decide we want to get into it. Still hanging nicely at the top of this 5-6 week consolidation here. A lot of volatility in Bitcoin and the Bitcoin related stocks today. That is our inter-asset correlation. Let's go to the tail of the tape. You can freeze this. So volatility on CPI, spot Bitcoin. Bank earnings start tomorrow morning, so we'll be looking for some clues to the reactions to those earnings report. Very often the way they open is quite different from the way they close. 2 days up, 2 days consolidation. Undercut and reclaim of the 8-day exponential moving average makes it the 4th close above it, 5th day above the 21-day moving average. Tech and XLK and software, the best sectors today. On the downside, semiconductors, no, they actually recovered by the end of the close. So just KRE, regional banks, biotech, and utilities. Added to 2 of our existing positions in-house, PDD and SMCI. Trim some more T-bills to be able to put that money into the stocks. Coming up on 2.0 adjusted beta, which would be twice the exposure, the equivalent of twice the exposure of the S&P 500. Bottom line on the day, hot CPI means volatility, but the bulls arrived and leaders outperformed. Let's take a look at a few charts today. We'll start with what we have in-house. I'll go from the smallest position to the largest. FCX undercut but closed on the 21-day moving average. That's a 3% position. Also 3% position SMCI. We made our third 1% buy on that today as it's consolidating nicely near the highs of this flat base. Next up is AMD, about a 3.5% position on this. Bounced at the 8 EMA. Uber over 6% on this now, as this we really caught this one right. Nice follow through, 3 nice days up now on Uber. Nvidia, about a 7% position in this, continues to be a clear market leader. Look at the volume bars down at the bottom there. CrowdStrike, another leader, continues to just act great. 5 straight days up now. 8% size on that, and also 8% on Lilly. Which continues to trend higher. A little tighter action and lower volume around the top of its base, which is completely normal. Nail, we also own. Home builders had a positive reversal today after initially being down on the stronger yields, which faded as the days went along. And that's it. That's pretty much the portfolio. So 4 that we're keeping a close eye on. We got stopped out of the STC considering re-entering it. It really showed relative strength today. Also ELF, which continues to show strength after undercutting and reclaiming the 21-day moving average. Snow, the 4th one that we're keeping a close eye on, reversed at that 200 level today. And one more, Shop, which was this is the 4th one, 6 days up. One of the first to reclaim the 21 after undercutting it on the tough week for leading stocks in the first week, but good action there. That's going to wrap it. As always, like to hear from you. The email is don@revereasset.com. If you're interested in becoming a client, my partner Dan Stewart, Dan at revereasset.com. The phone's 855-REAL-WEALTH. That's 855-732-5932. Remember, it's not how much you make in the markets, it's how much of that you can keep. The bulls showed up where they needed to on Monday. They followed through Tuesday, Wednesday, and now Thursday. Let's see how the week closes. And with that, we'll wrap up the video for Thursday, January 11th. This is Don Vandenbord with Revere Asset, telling it like it is. Thanks for listening and have a great day.